If I had to choose my 5 favorite covered call ETFs, what would that look like? Hold on to your seatbelts, folks. This is going to be a good one. Covered call ETFs. They have absolutely exploded in popularity over the last few years, and that momentum, it is still growing big time. In fact, 4 years ago when I began this channel, the content, it was skewed quite a bit towards individual stocks. And as we've been progressing, investor preference has been changing. In fact, nowadays I cover ETFs more than I ever have before. With that being said, there is one obvious truth to ETFs, and that is that, not all of them are created equal. Some keep your portfolio steady through the market ups and downs, while others quietly eat away. They eat away at your capital, even when the market is booming. So today, I'm going to share my 5 favorite covered call ETFs. The ones that I actually like, hold, or would happily buy myself. Plus, maybe I'll even throw in a couple of honorable mentions that didn't quite make the list, but still deserve a wee bit of a nod. When I pick a covered call ETF, I'm not just chasing yield. Sure, the monthly income is nice, no doubt about it, but I am looking for something that actually grows, or at least holds its value when the market's doing well. If an ETF can't perform in a bull market, it doesn't make my list. That's kind of a hard, fast rule. Of course, I'll give these guys a lot more leeway in a bear market because everything drops eventually. But when things are good, I need to see those charts moving in the right direction. I also like diversification, whether that's across multiple sectors or within a strong focus theme. And finally, I want consistency. A manager that sticks to their strategy and delivers stable results. A sub to the channel delivers a stable flow of future content. Normally I like to sort my lists by total return, but not today. These are my favorites, and it seems more fitting to rank them by just how much I love these ETFs for sure. So grab your coffee and crank up your yield meters because it's time for my top 5 covered call ETFs. Kicking off our list at number 5, it's the Evolve Canadian Banks and Lifeco's Enhanced Yield ETF. They have a ticker of BANK. When you think stability, dividends, and long-term performance, you have to think of the Canadian banks. Evolve's bank takes that classic reliability and turns it up a notch with a touch of leverage and covered calls to generate income. It's steady, it's powerful, and it's a must-watch in any bull market. Bank earns its spots because, it gives you that extra kick without going off the rails. Bank is currently priced at $8.80, and they do have a yield of 15%, which is a monthly dividend of 11 cents per share. And here's what we're looking for. That 1-year return on investment, that's coming in at 10.14%. So that's the growth that's happening in their share price alone. Once we factor in those dividends, we get a total return of 26.66%. That's not too shabby. Moving along and coming in at our 4th spot, we have the Harvest Bitcoin Leaders Income ETF, HBTE. Yeah, that's right. A covered call ETF that taps into the blockchain and crypto-related stocks. It's bold, it's modern, and it's definitely a wilder ride than your typical income play. However, I do like it for its creativity and, that crypto diversification. It's a small position ETF for me, a little splash of innovation in an income portfolio that keeps things interesting. They are priced at $26.52. They've got a yield of 14.93%. Once again, another monthly dividend, this one coming in at 33 cents per share. And their 1-year return on investment, and it's not even a full year as they are a newer fund, it's coming in at 115.43%. Oh gosh, add in those dividends, total return 128.84%. It goes without saying, this is the top on the list today when it comes to actual total returns for sure. As we step one position towards that number 1 spot, we have, number 3, and that is the Hamilton Enhanced Canadian Covered Call ETF with a very familiar ticker of HDIV. This fund captures the strength of Canada's biggest blue chip sectors: financials, energy, telecom, and utilities. And then it amplifies it with smart use of leverage and covered calls. The result is an ETF that performs well when Canada performs well. It's a homegrown hybrid that blends growth and income beautifully, and it's one of my go-to picks for Canadian exposure that actually keeps up in the bull markets. And they're coming in at a price of $20.13. They've got a yield of 10.25%. That is a monthly dividend, 17.3 cents per share. Their 1-year return on investment, 11.15%. Factor in the dividends, we get a total return of 22.55%. Sliding into the almost top spot at number 2, we've got HHIS, the Harvest Diversified High Income Shares ETF. This one isn't your average covered call fund. In fact, it's got a tech streak running through it. With big positions in names like Microsoft, Apple, and Nvidia, HHIS brings in the cash flow of a covered call strategy while still giving you exposure to some of the most innovative companies, well, on the planet. It's a portfolio that blends classic income generation with the growth potential of the technology sector. The best? Yeah, it's kind of the best of both worlds. Even with its tech bias, HHIS doesn't ignore balance. It still spreads exposure across sectors like healthcare, financials, and consumer staples. But make no mistake, the stars of this show are the tech giants driving global innovation and monthly distributions. That combination of yield and future-focused growth makes HHIS one of my favorite covered call ETFs in the market today. Their current price is coming in at $13.59, and they have a yield of, well, 22.08%. That is a monthly distribution of 25 cents per unit. Looking at their returns, that 1-year return on investment, 10.04%. Factor in those dividends, and we get a total return of 26.23%. That's not too shabby. We will return to the countdown in just a moment. Before we reveal the ETF at number 1, I want to call out a few honorable mentions. First up, EQCL, the Global X Enhanced All Equity Asset Allocation Covered Call ETF. This one, it's all about that global diversification with an income twist. It spreads exposure across multiple regions and sectors, then layers in covered calls for consistent yield. If you want broad equity exposure without giving up monthly income, EQCL is a great set it and relax kind of ETF. At the time of recording, this one is priced at $23.66. They've got a yield of 11.09%, monthly dividend of 22 cents per unit. Looking at their returns, that 1-year return on investment, 4.92%. Factor in the dividends, total return, 16.56%. And then there is, well, you guys knew this one was going to show up, HHIC, the Harvest Canadian High Income Shares ETF. As one of the newer names in the space, this fund brings Harvest covered call expertise home to Canada. You're going to find some familiar giants like Shopify, Royal Bank, Cameco, and Enbridge inside, delivering both income and a healthy dose of Canadian diversification. It is off to a strong start, and definitely one I will be watching closely. At the time of recording, their price was coming in at $13.26. They've got a yield of 14.48%. That's a monthly dividend of 16 cents per share. Their 1-year return on investment, it's closer to a couple of months. 9.77%. Factor in the dividend, total return 11.09%. Keep in mind that total return is small because they've only had one dividend thus far. Okay, now back to the countdown. Taking the top spot, no surprise here, it's HYLD, the Hamilton Enhanced US Covered Call ETF. This fund is the perfect example of a covered call ETF done right. Diversified exposure across U.S. sectors, a refined structure, and efficient leverage that boosts returns without blowing up the risk. Hamilton has continually improved HYLD since launch, streamlining the lineup and boosting performance, and the result is one of the most balanced, reliable, high-yield ETFs available in Canada. Big income, strong total return, that's why HYLD tops my list. At the time of recording, this one's coming in at $14.85. They've got a yield of 11.70%. That's a monthly dividend of 14.7 cents per unit. As to their returns, their one-year return on investment coming in at 5.24%. Factor in the dividends, we're getting a total return of 17.56%. At the end of the day, these 5 ETFs have something in common. They respect both sides of the investing equation, income and growth. They reward patience, hold up in good markets, and help smooth out the bad ones. These are my favorites. I would love to hear about your favorites. Hit the comments and drop the ETFs that make your list. Maybe, and I've been thinking about this, in a future video we can explore the community favorites. If you are interested in the ETFs that we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey by checking out this video on Canada's first split core Class A ETF. Thank you for watching, and I will see you in the next video.